The U.S. title insurance industry looks to be on solid financial footing, although results for 2017 were effectively flat. The ability of title insurers to maintain these results hinges largely on the effect of the rate hikes of the housing market. With us to discuss these dynamics are Meg Mulry, Associate Director, and David Blades, Senior Research Analyst. And David, premiums were up for 2017, but the rate of growth is slowing. Net income is positive, but down from the year before. What's driving these dynamics?
In 2017, specific to the four largest states in terms of generating title insurance premiums, Texas, California, Florida, and New York, and we saw three of those four states actually experience decreases. And so that's definitely driven part of the overall title insurance market's lower rate of growth in 2017. You know, higher home prices in general and also the increase in the 30-year mortgage rate definitely have tempered the amount of growth that we've seen and the rate of growth that we've seen. But in general, the rise in mortgage rates also had a negative impact on refinance origination. So again, all those factors are kind of playing into the trends that we've seen and the tempering of the overall rate of growth. Through the first half of this year, what we've seen is that direct premiums has actually been static from that standpoint. So if we continue to see that over the second half, and again, some of the storm activity could play a part in what we see in title insurance premium activity for the second half. So we'll look at that at the end of the year. But right now, through the first half, things have remained pretty steady. In terms of net income, you're right, net income was a little bit lower in 2017, but really that was driven by realized capital gains for the market in the aggregate being lower. In terms of pre-tax operating income, so again, just focusing on underwriting income and investment income, we actually saw an increase in pre-tax operating income, and it's actually been at a level the last 3 years that have been higher than we'd actually seen since 2006. So again, from an operating income standpoint, title insurers actually have been performing very well.
Now, the South and Southeast were hit pretty hard by hurricanes these past couple of years. The West, of course, we know about the wildfires. Being that title insurers are so closely tied to the real estate market, what impact did these events have on the market?
Well, I don't think there's any question when you look at, let's say, just the hurricane activity, both in Texas with Hurricane Harvey and also in Florida with Hurricane Irma. I think you definitely saw potential deals, probably falling through from the standpoint of, new home purchases. And I think, that definitely had an impact on the market. And I think when you also look out west, wildfire activity also probably led, from a direct loss standpoint in terms of whether it's, again, those wildfires or the hurricanes in those states. I think we had a direct impact to some extent on new home construction, and definitely it filtered down to the insurance premiums from a title insurance standpoint. I think what we're seeing overall is average home prices that have been increasing, and that actually also has a negative impact on the title insurance market. So I think when you factor in what we saw, from the storms and from the wildfires, and like I said, what's been happening, with the mortgage rates and also with average home prices, I think we're seeing those particular economic factors limiting title insurers to some extent from a growth standpoint. But overall, the market has been stable and still remains very healthy from AM Best perspective.
Now, Meg, millennials are quickly joining the home buying market. What impact is that having on title insurers?
So the millennials are actually having a harder time getting onto the housing market ladder that we are seeing, because due to mainly what David said, price appreciation, it's harder now to save up the money, the tighter lending standards that they have. They've got to, obviously put down a down payment, and raising interest rates. The 30-year mortgage rate hit 4.9%, and it's been trending around there. Obviously, the Fed is continuing to tighten, so we see lending rates going up. So as 30-year mortgage rates continue to come up, the price of home ownership is becoming more expensive. And another thing that David mentioned too is that major markets like California, New York, New Jersey, these are like major markets for the title insurers. They've lost their state and local tax deduction. So we'll see how that plays out in terms of like where millennials are going to be moving in the future due to the fact that they are largely more agile than previous generations. So will that have an impact on housing prices and where millennials choose to purchase homes if they are able to, raise the down payment to get there? Homeownership is still viewed as a very positive thing in millennials' eyes, but it's just a larger hurdle. Another hurdle that they're facing is student debt. Student debt in the U.S. in the second quarter of 2018 was over $1.4 trillion, and that's 3 times higher than it was before the housing bust. So if you're already servicing debt, it delays homeownership and all these major purchases for the millennial generation. So on the whole, we think they are still going to enter the housing market, but it is a bit more challenging due to price appreciation, higher interest rates, debt service that they already have. So time will tell, but it's going to be a slow transition, I think.
Are there any other economic considerations that could be having an impact on title insurers?
Yeah, I mean, interest rates. Obviously, it's a very interest rate sensitive market. In December, we're looking for the Fed to increase rates again. This will largely push up the 30-year mortgage rate once more, just making homeownership slightly more expensive. And we're going to likely see continued strong economic growth. It might ease a little bit in 2019 as the fiscal stimulus is no longer there. But we are going to continue to see some growth in the U.S., which is positive. But unemployment is remaining very low, and that's a very big driver for consumer sentiment. And consumer sentiment remains very positive. And as consumer sentiment remains positive, it's a very good thing for the housing market. But rising interest rates will definitely be a headwind for the title industry in the coming year.
Thanks, Meg. Thanks, David.
Thank you,
Thank
John.
you.
You can find the full report online at ambest.com. And for AM Best TV, I'm John Weber.